Wasting money on cures. Forgot how to fix myself. They say that time is free. Then why is it so precious? Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. Time is running out. Time is running out. Lately I've lost my track. I've sailed the deeper seas, hoping to find something to bring back better times. Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. But time is running out. 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 Time is running. Time is running out. But time is running out. What if my best days are over? They can't be over. They can't be over now. Time is running out. What if my best days are over? They can't be over now. Time is running out. Time is running out. Time is running out.
Good morning, everyone. It's an early start today, 10:30 for our latest live AQA A-level business live revision. So I've just been distracted by Graham pointing at his I Love Business badge, and surprisingly, I've also got mine on as well. I think my badge is bigger than yours, G, isn't it? Does it look a bit bigger?
Yeah, it's like one of those you get on a I am 5-year-old birthday card. I don't know if you've got a special badge.
I probably have got a special badge. Graham has literally, whilst I was writing these 15 new MCQs yesterday, Graham was having a day at the snooker at the world finals and got back just in time for this session, G, didn't you?
Yeah, I was there yesterday. Yeah, I met the incredible Kyron Wilson. He was very polite. Met him going in. So, yeah, it was
Superb.
good. Looking forward to the end of the final today.
It's amazing sport. I'm quite good at snooker, G. I played it for an hour a couple of weeks ago, and not once did I lose any of those balls down any of those pockets.
That
the
is
edge of the
World
table.
Championship form, that is. That is World Championship form.
Anyway, so we will crack on with this session. And, well, let's start with, whilst people are joining us live, shall we start with our big reveal? And it's a name of business.
Yes. Shall I take this one away?
Go for it, G. Yeah.
Okay, so hello all, and I see in the chat window we've got a few people who've not been to a live stream before, so this is just a starter activity. The question mark hides the name of a business. The 5 clues allude to the name of that business. If you can work out the name of the business after each clue, please type it in the chat window. So shall I have a look at clue number 1? Now this business was founded in Leeds in 1884. So if you're sat there at your laptop maybe or on your phone thinking, I know a business that was founded in 1884, but it was in Newcastle. Well, that can't be the right answer because this one was founded in Leeds in 1884. So in 2007, they launched their Plan A initiative for CSR, that's corporate social responsibility. Do you know what? I think we're already in. I think
Wow.
we're already in the chat. I think it's the plan A. I think it's plan A. I think it might be.
If I'd have written plan B, we might have gone away with it.
We might go with. Shall I have a look clue number 3 for those who've not. So it's got an own label brand that I'd use on all of its products up to 2,000.
That went well, didn't it? We normally get to clue 4.
We do. A pioneer in the use of radio frequency identification tags. Clue number 5 is, if you're still not got it yet, Colin the Caterpillar. The famous Colin the Caterpillar. And it is Marks and Spencer.
Kieran was at an advantage for that one.
Oh, Kieran, do you get discount on Colin the Caterpillars?
You will do.
If so, then please send us a message. I love Colin the Caterpillar. Okay, shall we move on to the
main piece of this session? So what we've done is we've written 15 brand new multiple choice questions, hopefully exam style, hopefully exam standard, certainly drawn from across the specification. These haven't been asked before. And so mark your own. So we'll go through them 1 through to 15 and maybe about 45 seconds to a minute, G, to allow people to have a go in the live chat. If you wish, you might just want to write your answers down and maybe keep your score as you go. And let's see how many you can get out of 15. So here's our first one.
Shall I take this one? Yeah. So question number 1.
Do an alternate, yeah.
Well, maybe not alternative, but we'll see how we go. A business decides to close its IT department and switch to an external supplier of IT. This is an example of offshoring, outsourcing, mass customization, or lean production. So what do we think? Offshoring, outsourcing, mass customization, lean production. I think I'll do the next one as well, Jim. I think we'll maybe do 2 in a row. So offshoring, outsourcing, mass customization, lean production. I think everyone's gone for outsourcing, which is really good because there's 2 terms on there which, when examined, have often been mixed up. I.e. offshoring, outsourcing. Shall we reveal the answer? B, it is. It's outsourcing. Does anyone want to tell us what offshoring is in the chat window? Because offshoring and outsourcing are quite frequently examined topics, aren't they? So outsourcing is, of course, where, in this case, a business has decided to close its IT department and switch to an external supplier of IT support, which is outsourcing. Mass customization has been previously examined as well, as has lean production. Yeah, so there, William Bowley there, can't really argue with that. Offshoring is when you move part of, doesn't have to be all of it, of your business abroad. There was a lot of offshoring done about 10 years ago, wasn't it, to take advantage of lower labour costs in countries such as China and things like that. Yeah, so really good understanding there. Brilliant. Shall we have a look at the next one? So statement 1 here and statement 2. So these are the first of our 2 statement questions. So all you need to do is decide whether statement 1 is true or false and whether statement 2 is true or false and select A, B, C, or D. So a rise in corporation tax is an example of fiscal policy. Is that true or false? The removal of import quotas and tariffs should lead to more open trade. Is that true or false? So all you need to do is select A, B, C, or D. And interestingly, Jim, open trade, protectionism was a 25-mark question several years ago. It was an essay question. So you need to make sure you are up on your knowledge and understanding of protectionism, open trade, quotas, tariffs. So the majority seem to be going for A, don't they? A rise in corporation tax is an example of fiscal policy. The removal of import quotas should lead to more open trade, and we'll reveal the answer. Yeah, it is indeed. So, corporation tax and government spending is fiscal policy. So removing import quotas and tariffs should lead to more open trade. The reverse of that, more quotas and more tariffs would increase protectionism. So that is a common 25-mark question. Open trade and protectionism. Well done, everyone. Great stuff.
Looks like most people are off to a flying start. Maybe, hopefully 2 out of 2. Let's have a go at our first calculation question. This year, a business had a favourable profit variance, that's sales less costs, of £125,000. But it had an adverse cost variance of £40,000. So what was the missing number? What was the revenue variance this year? It's some combination of favourable, adverse, and either 165 or 85. What do we think? So don't forget, there's 3 elements to variances. There's the sales variance or revenue variance. There's the cost variance, and then the result must be the profit variance. So while we're told the profit variance of the result, that was favourable 125, but adverse cost of 40. So what was the revenue variance? And it looks like we've got a mixture of answers here. Some people going for C, some going for A. Shall we reveal the answer, G?
Yeah, most are going for A and C, aren't they? So
yeah, I think the answer is A. So why is it? Well, we know that the final variance, the profit variance, was 125,000 favourable. That was good news. However, that was after some bad news, where our cost variance was £40,000. That must mean that our revenue variance was £165,000 favourable. If you work the sales, costs and profit out, we must have had £165,000 more sales than we were budgeting to end up with a favourable profit variance of 125. So answer A.
Great stuff.
Let's have a look. This question 4. So 2 statements again. I think we've got 3 or 4 of these 2-statement formats.
You have.
And they are a common way of AQA testing, sometimes the same topic area, sometimes different ones. So in this case, it's all about investment appraisal. Statement 1, discount factors are applied to future net cash flows when calculating payback. Is that true or false? And statement 2, ARR, well, the ARR of an investment project ignores the net cash flows once payback has been achieved. Is that true or false? A lot to read there, but the answer is always the same, either A, B, C, or D. Mm-hmm. Reese and Fred and quite a few others, Shobi and Noah, amongst others, are all stating that both those 2 statements are false. Charlotte and Hayden, Nicole agree. So let's have a look. It is indeed. They're both false. Common misconception that you use discount factors when calculating payback. You don't. Payback period is just around the net cash flows. Discount factors only used for net present value, discounted cash flow. And ARR, well, it's first, it's got nothing to do with payback, but the ARR looks at all the net cash flows of the project, doesn't it? It doesn't stop looking at them once payback's been achieved. So an ARR looks at all the net returns less the investment and expresses it as a percentage. So yeah, the answer was indeed D. So we've got 4 questions. We're on question 5. G, do you want to take this one?
Okay, so which one of the following is a demographic factor which is likely to influence the costs of a business? So is it A, B, C, or D? Rising interest rates, higher exchange rates, new competitors entering a market, or fewer people of working age wanting to work? So I think this seems to be a little bit more accessible for the students, with the majority going for D. So really, a lot of those, depending on the business, would lead to an increase potentially in costs. It's which of those influences are related to demographic factors. And again, demographic factors was the subject of a 25-mark question on paper 1 recently as well. So yes, I think we've got a very good understanding of demographic factors. So should we reveal the answer? So obviously this is an MCQ, and we'd probably want to know why. Maybe fewer people of working age, maybe if there's less supply of labour, then maybe wages would increase, which therefore potentially would increase the costs of the business. But it was also recognising that D was the only demographic factor there anyway, but all of those would lead to an increase in costs, potentially depending on the business. Should we have a look at question 6, Jim? Now, this is an interesting one, gearing. So a business has a gearing ratio of 50%. So its gearing is 50%. On its own, which one of the following changes would result in a fall in gearing? So what would result in it maybe reducing from 50% to something smaller? Would it be an increase in inventory turnover, raising new debt, increasing capital expenditure, or raising new share capital? This really tests your knowledge and understanding of the gearing formula. If you know the gearing formula, then this will be a very easy question to answer. If you don't know the gearing formula, then it'll be slightly more challenging. But it seems that a lot of us do know our gearing formula. So the gearing ratio is such an important ratio. Sometimes in paper 1, a few years ago, students had to work out the gearing ratio after a business had taken on additional borrowing, which required students to manipulate the gearing formula. So make sure you understand it as a concept and can calculate it. Shall we reveal the answer?
Here it comes.
Yeah, it is D. So raising new share capital would, of course, increase the total equity, which would mean the proportion of debt in relation to capital employed would be lower, resulting in a fall in the gearing ratio. The business becomes less dependent, really, doesn't it, Jim, on debt if it raises new share capital.
Yeah, and that's the thing about capital employed. A lot of students think, well, what does that actually mean? Well, really, all it is what type and how much finance is employed in the business. And there's really only two types, aren't there? There's equity, share capital, retained profits, the shareholders' money, and there's debt or non-current liabilities. So that's really what capital employed is all about.
Yeah, is that Sheila? I'm just struggling to read that. Yeah, so would increase gearing. Well, yeah, all things being equal, it would, because what would happen there is your non-current liabilities would increase. That's the top of the formula. And your capital employed would also increase. But what would happen there is your proportion of debt in relation to capital employed would increase. Subsequently, therefore, an increase in non-current liabilities would lead to an increase in gearing, all things being equal. Great stuff.
Danny's asking, do you think it's worth watching the EdXL live streams coming up, even though you study AQA? Always worth it, because I think there's a lot of crossover. Particularly when it comes to things like calculations and what have you.
There's a lot of crossover. And what we tend to do is, that tends to happen a lot, Danny, to be fair. We do get a lot of students on both. And what we tend to do is, where there's a topic that's probably not applicable to EdXL or AQA, then we'll highlight it.
Yeah.
Gearing's applicable to both.
It is. Okay, so we've done 6 out of 6. Let's do one more, then we'll ask you for how you're getting on, maybe. If you're keeping score, you don't have to tell us. Okay. And we're back into 3.3 here, a bit of marketing.
Shall I do this one? Are you doing this one?
G. No, it's yours, mate. Yeah.
Okay. Market segmentation, splitting down the market into different groups of people with similar characteristics. That's what market segmentation is. So a business segments its market based on how often customers buy, such as first-time customers, regular and occasional customers. Is this an example of geographic segmentation, behavioral segmentation, demographic, or income segmentation? There are the 4 methods, aren't they, on the spec?
They are.
So which of those is it really? Is it segmenting customers based on geographic factors, behavioral, demographic, or income? What do we think? And again, I think we are on top of our segmentation. And it is indeed, B, how customers behave, how often they buy, what are their behavioral attributes. Well done, everyone. That was a bit more of an accessible question, that.
Yeah, but I think the thing about with all these questions is we're trying to draw them from the specification. So wherever possible, we're including in the answers possible responses, but also from the specification. So hopefully useful. How are you getting on? We've had 7 so far. We've got another 8 to go. Maybe in the live chat, let us know how many out of 7. There's always a comment that says I've got 8 out of 7. But William, flying so far, 7 out of 7 so far. They don't get any easier, but I don't think they get any harder. So that's a great start. And Alicia and Shobi and Danny also on a good number, 6 or 7 out of 7. This is good stuff. Okay, let's move on to number 8. And it's another one of our 2-statement questions. This one's all about quality. So statement 1, the main goal of quality assurance is to identify defective output when it reaches the end of the production process. True or false? And statement 2, quality control involves techniques such as inspection and testing to ensure products meet specified standards. True or false? These 2 topic areas are commonly examined, and really part of the key with these is to understand the difference between quality assurance and quality control. Of course, businesses can use both, but they do have fundamentally different approaches, really. I'll give you another maybe 20 seconds to have a go. Danny and Kira and Juliana all going for the same letter. And it would be a shame if that letter was incorrect, but it isn't. I think they've got it right. Looking really strong on this one. Let's have a look at the answer. It is indeed C. It is, isn't it? Well, quality assurance, it's not really about trying to find defective outputs at the end of the production process. Quality assurance is about trying to make sure that things don't become defective. It's about a right first time approach. It's more of a sort of an organizational cultural approach to prevent defective output, never mind identifying it. So that's false. But yes, quality control is very much all about inspection and testing, not just at the end of the production process, but perhaps during it, even before the process starts. Maybe you're looking at the inputs, the raw materials. So yeah, quality control, I always remember it you try to inspect quality in, whereas quality assurance is trying to make sure that it's right first time.
Yeah, I think in reality, which you mentioned, Jim, that most businesses, to be fair, especially manufacturing, do both.
Of course.
But the processes are different.
Yeah. And excellent. Right, question 9. And we've got a calculation question here. Shall I do this one, G?
Do you want me to do? Are you doing this one?
I'll do this one. I'll do this one. So we've got some financial information in the table about a business for this year. And based on that information, can you work out what the return on capital employed is? One of our profitability ratios. And there should be enough information in that table to be able to work it out. It's either 20%, 12.5%, 33.3%, or 50%. What do we think? A little bit of manipulation of data required in this one to get to the answer. And part of that refers, I suppose, back to what we were talking about with gearing, G, doesn't it, in terms of our formula?
Yeah. So obviously, you should know the formula, but you've got to work at getting the bottom half of it, because there's some there's an extra step in the calculation there. I think Hayden there. I think Hayden's shown the working out. Can't fault that.
Amazing. Don't forget, you don't need to show your workings in MCQs, but it's brilliant to do it. Good technique as you're revising.
Yeah, and if this was a standalone calculation, which it could be, especially on paper 1, you must ensure you put that percentage sign after highlighted in last year's examiner's reports. Too many students missing out units at the end of relevant calculations like percentage signs and pound signs.
Yeah. Jennifer, Snap Bandit, 2 of our regulars have gone for the same answer, as has lots of others, Yasmin included. It is indeed 12.5%. How did we get to that? Well, return on capital employed, it's a profitability ratio that measures the return, operating profit being the top, as a percentage of capital employed. Well, capital employed, we know, is total equity plus non-current liabilities. So we simply add together the bottom parts there, 200,000, so 25,000 divided by 200, expressed as a percentage. Don't forget, return on capital employed is a profitability ratio. 12.5%. Well done. Question 10. G, over to you.
Okay, so a business allows its employees to meet regularly to discuss ways that the business can eliminate waste, improve efficiency, and boost productivity. Is this an example of benchmarking, entrepreneurship, Kaizen, or research and development? So what is it? So the business allows its employees to meet regularly to discuss ways that the business can eliminate waste, improve efficiency, and boost productivity. So I think the majority are going for Kaizen. Entrepreneurship's an interesting one because entrepreneurship was specifically examined several years ago, and it was really clear that the majority of students forgot what it was. We'll touch on it, actually. It could be the right answer. We don't know, do we? Because we've not revealed.
We'd be foolish to guess, wouldn't we?
We'd be foolish to guess, but we don't have to guess because we know the answer. And it will be revealed. It is Kaizen, Kaizen, continuous improvement. So this business allows its employees to meet regularly to discuss ways that the business can continually improve its processes. Now, entrepreneurship, when this was examined, a lot of students confused it for interns as well as entrepreneurship. So entrepreneurship and entrepreneurship are 2 different things. Entrepreneurship is where a business encourages its employees, they're still employees, to be entrepreneurial, but within inside the business, hence the intra. And that was a real misconception by students. So it's basically entrepreneurship within the business, hence the term intrapreneurship.
Whereas Kaizen is all about efficiency, productivity, continuous improvement, looking for lots of small improvements, isn't it?
Marginal gains.
Indeed. We've got 5 questions left. Let's have a look at question 11. Shall I do this one? Yeah, you do this one, G. Because you're usually good at question 11s, aren't you?
I love it's my out of 15. Question 11's my favourite. A business sells trade receivables of £100,000 to a debt factoring firm in return for £90,000. The effect of this on cash flow and profit would be A, lower cash flow and lower profit, B, lower cash flow and higher profit, C, higher cash flow and lower profit, D, higher cash flow and higher profit. It's definitely got something to do with cash flow and profit from the options there. And an area that a lot of students get confused with, the difference between cash flow and profit, about how a profitable business can run out of cash. So it's a really good question, this.
I thought this would. I think it's a really good question. Having said that, I did write it, so I shouldn't be saying that. But I thought this would be a tricky question, but not for our lot today. Unbelievably strong. Wow.
No. So I think the answer is indeed. It is saying, yeah, so cash flow would increase. You're getting that money's coming in, because at the minute they've not got that cash because it's a debt, so they've got that coming in. But it's 10,000 lower than what they were owed, so profit would be lower, cash flow would be higher. So that is that was a really. I thought that was a difficult question, but everyone rose to the challenge, and it is really important that you really understand the difference between cash flow and profit. It is often examined, but obviously we do, judging by the right answer.
Really good. Question 12. How come it's always me doing these 2-statement questions?
I'll do this one if you want.
No, I'll do it. That's right. Take a break, G. Take a break. Give your badge a shine. Mine's slightly bigger than yours, to be honest. A business is more efficient. Oh, looks like this is about SWOT analysis. So a business is more efficient than its competitors and has lower unit costs. That will be shown as an opportunity in a SWOT analysis of the business, true or false. And then another one, demand for the products of a business may fall due to upcoming changes in business legislation. Is that going to be shown as a weakness in a SWOT analysis? What do we think? It's obviously some combination of true and false, and testing knowledge and understanding of what type of things will be categorized where within that framework. It's really useful, very popular framework, isn't it? SWOT analysis. Harrison and Mercy, Nicole and Sam, and Chilling with Chops, who's I've noticed really strong today. Lots of correct answers in the live chat, all going for the same answer, which is to say that both of those two statements are false. Could it be? Let's have a look. It is indeed. Yeah, I think both are false, aren't they? So don't forget, strengths and weaknesses, those are things that are within the control of the business. They are internal to the business. And if a business is more efficient than its competitors with lower unit costs, well, that's a strength, isn't it? That's something that they have some control over. And definitely, that's a strength rather than an opportunity.
Yeah.
And statement 2, well, this sounds like something that's happening in the external environment. So don't forget, opportunities and threats are external, outside the control of the business, but they have to be responded to by the business. And in this case, it's a change in business legislation. That was the key there, which may affect demand for the products of the business. So therefore, that would be, in theory, a threat. Not a weakness.
SWOT analysis was recently examined as an MCQ, and I think, if my memory serves me rightly, it was about whether improvements in infrastructure would be a strength of the business. And it was clear that some students didn't understand what the term infrastructure meant, and obviously improvements of infrastructure is outside of the business, therefore potential opportunity. So didn't throw the students here. I think we all got that one right.
All. I mean, Fanatic Flair amongst others. It's great to see in the live chat people explaining, not just writing the answer, but explaining the answer. Lots of people doing that, which is really good. That's what the live chat's there for. 13, 14, 15. 3 questions left. G, do you want to do this one?
Okay, yeah. So a retailer buys a wholesaler that currently supplies it with a range of goods. This is an example of forward vertical integration, conglomerate integration, horizontal integration, backward vertical integration. It's definitely got something to do with integration, I think, this question, judging by the A, B, C, or Ds. So I think we all know our key terms here. So a retailer buying a wholesaler that currently supplies it with a range of goods. And that happens a lot, doesn't it? You find a lot of supermarkets tend to do that, don't they? A lot of them. I think Tesco recently bought
They did, didn't they? Bought one of the largest wholesalers, yeah.
All the wholesalers. It is indeed backward vertical integration. Yeah, as it was. So William there, before you in the supply chain. Yeah, it's good there.
I think that's the key. That's the key phrase. It's supply chain, isn't it? So there's, from production of some, let's say, some retail goods or some goods that get sold in shops, from the manufacturer possibly to a wholesaler. The wholesaler breaks the bulk up and sells it in smaller units to the retailer, but that is further earlier in the supply chain. So effectively the retailer is going backwards, aren't they? Buying the wholesaler.
We've got someone in the chat now called never seen this name before, Jeff Riley, and Jeff Riley said Tesco. I don't want to pronounce this, but I'll give it a go. Tesco bought Booker, the wholesalers. and
There we
Booker
go.
own Budgeons. There was a question there. I just want to pick up on it about. I think
Yeah.
maybe I poked a wasp's nest there when I mentioned infrastructure, and I think someone said, "What is
Yeah, it's Danny.
infrastructure?" Yeah, infrastructure is just improvements to the things like the road network, supply chains, things like that. Telecommunications.
Yeah.
So, for example, if you're a supermarket and you rely heavily on deliveries, improvements to maybe the road networks, improvements to the infrastructure, could be a real opportunity. It might allow you to get your supplies quicker, more efficiently. So that's really what infrastructure is.
Yeah.
There we
Okay,
go.
we're down to the last two. I'll tell you what, I'll do this one, Jay, because it's a two-statement question, and you can finish off with the last one.
On the calculation, yeah, I'll do that.
I'm better off not doing calculations, aren't I? As previous experience has shown. So, statement one, this is a bit easier to read, bit shorter. Not any easier, though. So, non-profit organisations, such as charities and mutuals, do not make profits. True or false? And lastly, on this two-statement one, sole traders have unlimited liability. True or false?
Difficult one.
It isn't easy. Sometimes the short ones are the harder ones. What do you think? Tests. This takes us right back to different business forms, doesn't it? Right at the start of, excuse me, Unit 3.1. One of the first things maybe we covered in lessons. What do we think? Let's have a look.
Yeah, I think statement one is causing a little bit of confusion there.
Yeah, not to everyone, though.
Not to everyone, no, not to everyone, but it's So
I think Ollie Kang has nailed
William
it.
as well.
I'm going to stick this in the live chat because this effectively gets to the nub of the answer. So Ollie
William
says,
as well, mind.
Yeah, William as well. Non-profits, they might be not for profit, but they do make profits because they need to make a profit in order to spend money on their chosen cause, and that's the point, isn't it? Non-profit organisations, particularly charities, mutuals, they do want to make a profit because making a profit enables them to spend more on their stated activities and goals. So, for example, the charity shops, they look to make a profit so they can reinvest that in the services that they provide. Sole traders, probably an easy one. That's true, isn't it? Sole traders do have unlimited liability, whereas the shareholders of a private company would have limited liability, and that's one of the key protections. One of the risks of being a sole trader, as we discussed at the workshop.
Sorry, Jim. I was interrupting you. Can we highlight Montage Life's answer there, because I think that's quite an interesting point there. So that is a really interesting point. I think the confusion comes around the word non-profit, but it means profit's not the overriding objective of the business. Any profits that are made, I mean, some charities can make a loss, but any profits that are made, as Montage Life says, there, are retained and always reinvested in the business. They're not divvied out to shareholders, as it were. Great stuff.
Because I was asking, when are we going to do a BTEC Unit 2? There's one scheduled for this week, I think, isn't it? Wednesday. I think we're doing one helping people get ready for the Unit 2 exam on Thursday. So if anyone else is looking for a bit of help on that, that's when it is. Just to have a look on our YouTube channel. And Graham, we're down to the last question. Perfect timing. Over to you, mate.
Okay. So a business has one product, that's lucky for us, which has a contribution per unit of £40. It sold 80,000 units this year and had a margin of safety of 20,000 units. What were the fixed costs? Now, there's a few steps in this. This is a tricky question. Is it A, 2 million, B, 3.2 million, C, 800,000, D, 2.4 million? So we know, don't we, the contribution is selling price per unit minus variable cost per unit. And we know the break even is fixed costs per unit divided by contribution per unit. So we can work some of the formula there. It's all about margin of safety. I often find that a lot of students forget the margin of safety formula in exams, and it's such a good concept to know, but it doesn't seem as though we've got any problems here, which is incredible, really, isn't it?
I think that's been a feature of all of these 15. I thought we'd written 15 quite challenging MCQs. I must try harder.
Well, to be fair, I did a bit of quality control, didn't I, Jim? So
you did.
We had a quality control process in place, didn't we? So I take some responsibility as part of the quality management team. So it looks as though, and Harrison's even put
it's put the working in, yeah. A
bit of working out there. So so the break-even point must have been 60,000 because Margin of safety is actual output minus break-even output. So the 80,000 minus the 20,000 gives us our break-even output. And we just reverse the formula. The 60,000 times the £40 gives us 2.4 million. And interestingly, not many people know this, Jim. But I'm sure but you do, because we've mentioned it before, haven't we? That the margin of safety multiplied by contribution per unit is profit, because the fixed costs are being covered, haven't they?
It is. It's a magic formula that nobody else knows.
Formula.
Well, I thought we were the only two people who knew it, but now people know it.
200, yeah. So the break-even formula, Kieran, is fixed costs divided by contribution per unit, and contribution per unit is selling price per unit minus variable cost per unit. Now, whenever you work break, if you ask to work break even out, some students put a pound sign in front of it, therefore won't get full marks. You should put units after, because that's what it is. And margin of safety is actual output minus break even output.
Amazing work.
There we go.
Well, before we finish, let us know in the live chat, how did you get on? Let's have a look, see whether anyone got more than 15. What's our scores? I think the average on the MCQs in paper 1 is about 9.5, 10, isn't it, G? Depends.
Yeah.
Usually there's usually around the 10 mark, usually not much more than that. So if you can get 11, 12, 13, 14, 15 or something like that on the day, then you're off to a flyer with paper 1. I'm just looking at some of the scores coming in. Not surprised, really, because sensational answers in the live chat. Gabrielle's got 14. William, who's an outstanding student, he managed to find an extra mark. Maybe he awarded himself a bonus mark. Ella, Sam, Chillin, all in the 13s, 14s, 15s. Amazing stuff. What do you think, G? How many do you think we would have got if we hadn't written the answers?
If we hadn't written the questions or the answers, difficult to say. But I'd hope I would have got 10 there, 10 minimum. I think it's paper 1. I feel, and we'll be doing a paper 1 warm up, won't we?
We are, as well as some other sessions coming up. This week. Yeah.
Paper 1. If you can get 10 or more marks on the MCQs, and usually, nearly always after them MCQs, there'll be 2 or 3 calculations worth anything between 6 and 8 marks. If you can get, say, 10 or more on the MCQs and get those calculations right, you're on a real strong path. Because that paper 1 is really so important for the A level, because paper 2 and paper 3 are challenging. So, work hard at the MCQs, practice your calculations ahead of paper 1. We will be doing something paper 1 warm up next week, but that it really sets the scene and the foundations for paper 1. Do well on the MCQs, get those calculations correct, and then you're going to be flying.
Yeah, too right. Well, we take a break for a day now, but then we're back on Wednesday. I think we're doing a session looking at some 9 markers, probably maybe 3 9 markers. Might have time for 3 or 4. Well, we'll just have a look at those and how to unpick them, how to answer them. And I think on Friday we're back doing some short calculations. So again, paper 1 focus before as we get closer to paper 1 next week. So hopefully you found this session useful. If you have, please click that thumbs up button. It really annoys the economics team, who like to feel as though they get more likes on their live streams than any other subject. Not today, though. So please give it a thumbs up if you found it useful. Any questions on anything we've covered, put them into the comments once this recording goes live, which happens in about 10 seconds time when I finish. And well, keep going with the revision. We'll look forward to catching you on a future live stream. Cheers, G.
Cheers now.
Well done, everyone.